Hi and welcome to the Market Alert for Monday the 16th of May 2022. So terrible weekends with strong dead cat bounce as bear market marches on. There was a sense of calm in the markets, but again without any fundamental news to suggest this is perhaps the bottom. Maybe not. We could see another leg down yet. Are we there yet? Has the market hit peak capitulation? According to Bank of America's Michael Harnett, enjoy the bear market rally, but don't stay too long. So obviously Bank of America are seeing another leg down too. Selling low, buying high frustration continues. Max pain market. So, this is what this is alluding to, is those that are short and then watching the market come back. They get out and then go long, and then the market turns and goes down again. Crash watch also out on Friday as well. The template of 1929-1987 is coming into focus in recent trading days. And once again, the mention of diesel rationing could hit East Coast this summer, refinery owner says. I wouldn't be surprised to see diesel being rationed on the East Coast this summer. We've got egg prices soar as 10% of nations' hens wiped out by devastating bird flu. This is in the US. And India halts wheat exports as food security at risk. And speaking of food riots in Sri Lanka turn deadly as protesters beat up police, burn down politicians' houses. The Arab Spring 2.0 is about to make a grand entrance. And further news, economic news this time. There is, what we got this week? Today we've got monetary policy hearings. That's for the UK Bank of England. Tuesday, we got the Fed out, which you can see there, and retail sales as well. But the big one for me this week is the UK CPI from 7% to 9.1. It is forecast. And then we've got EU news on Wednesday as well. And then really we don't get too much for the rest of the week. But for me, this is the big one. The UK inflation numbers out on Wednesday. Gold-silver ratio plummet on Friday as silver recovered a bit, but overnight silver starting to resume its downside, and $20 is still the target for the downside for me, if not slightly lower there for this market. Anyway, let's move on. Have a look at the Dow. We can see that there was a recovery here on Friday too, trading up to 38% retracement from here back to here. The market's struggling with this overnight and has now moved lower. It'll need to take out the 5-bar moving average in order to move back to the downside. Like I say, we've got a bit of a dead cat bounce situation going on at the moment, in order to head back to the downside, suck enough people in. You can see there on Friday the market up, then we had the news, the market then moving back to the upside again with no doubt plunge team assisted move there to the upside, but you can see already the market's given back 78% of this overnight, oversold here, and attempting to move higher but running into the 200 MA there and the DP, so we could see a resumption to the downside there. In the German DAX, we have a similar picture. Just have a look here. This is the weekly chart. We want the daily chart. So you can see prices have rallied up to 78%, 50-bar moving average. Market struggling with this overnight. Needs to close below the 20 and the 5 in order to move lower. The market gapped higher. If we have a look at the 30-minute, you can see there's the gap. The market's come and filled the gap and has moved down to the DP level there at the moment. We're oversold on the downside. We're trying to bring the market back. We've come back 60 points, and the market is now starting to struggle there. But we'll see what happens when we get the opening at 7 a.m. on the futures market. 50% retracement or just shy of it there at the moment. On the overnight, a 5-minute, you can see that gap more clearly, and then we had a second gap here as well. This one hasn't been filled back on the upside though, which is interesting, but continue to the downside to that DP level where the market is still finding some support. I would expect a short-term burst to the upside on the opening of the futures market at 7 a.m. and then maybe the weakness at this high will develop into something on the downside. On Friday, if we just scoot along here, you'll see that the market started off with a bounce in the futures market. Then we had double bottom retracement over sold with a crossover. You can see that there, the crossover just there, and then the market moving up till it was overbought, pulls back to the 20 bar moving average, moves up, overbought again, and you'll see this constant as it moves up, being overbought, then oversold, until we get into this sideways move, waiting for news. The market then opens at 2:30 in the US for the Dow, and again you can see the buying coming into the market, and it's moved to the upside, pulls back, and then moves to the upside as well. Now you've got a double top in the oscillator with an 89% retracement, and the market retracing there. But currently, as I say, watch the DP rally up to the high, and then if any move to the downside, you've got the support here as well to see if the market will hold at that level. In the GBP JPY, the market still stuck in a bit of a sideways range there, but in the 30-minute chart on Friday, again you can see that sideways move there until the Dow opened, and then the market moving higher, the dollar moving lower, the silver moving higher. But overnight the rally has fizzled out at the R1. Prices close back below the 200 MA with selling, and we've got divergence, we've got a loss of momentum, and the market's come back to the DP and the 62, and it's got to hold at the 78. If it fails to hold there, we go down to 89, which is also the S1, and then eventually making our way down to Friday's low there. The pound sideways too, still at that 122.50 area. And in the 30-minute, you can see sideways overnight. In the early morning there, but overnight prices managing to rally up to the R1 till we have again some divergence here, where you can see the market's made lower momentum here, but higher price here. We've got the selling and supply coming into the markets, and prices have traded down to 78% retracement. In order to move higher, we're going to have to see prices rally through this set of fibs here, and also Friday's close and the 200 MA. If not, we could see the market head down towards the S1, but that would mean breaking both the 89% retracement and the DP. And finally, in the metals markets, silver continues to be moved to the downside. We remain red in the daily chart. I did put an order in on Thursday to buy just below $20, $19.98, and I think we'll get down to that today as the market opens. You can already see on the overnights that we've got the weakness in here, so down to this is the 20.50, but there's no problem in getting down $1.50 in the silver market of late. It's quite easy, especially if they're doing it first thing in the morning. Despite the fact that we're oversold at the moment on the downside, we might have a bit of a bounce, but getting back above 22 is going to be very, very difficult, and you only have to look at the monthly chart to see that we've got a lot of weakness around here. This is the $20 line that I've put on the chart. That's where I'm expecting to buy, and if not, then we'll go down to $19. So we'll just have to wait and see there. The gold also under pressure today. You can see this having had a bit of a bounce on Friday, but it's already starting to look weak. Watch these levels here, particularly the $1,800 level. That's going to be key. 1800, there's 1799.92, which is Friday's low. This is going to be taken out today. That I have no doubts about. They're just crushing the metals at the moment, and that's because they'll be moving the dollar back to the upside. It's just really, really strong at the moment. It won't be for at some point in the future, but at the moment, really, really strong. And you can see that in the monthly chart there. It continues to move to the upside. It's a NAF currency, a devalued currency, as all currencies are, but it's the best one of the bad bunch. It's the only way to describe it. and it's still the world reserve currency, so anything that's inversely related, Bitcoin, metals, etc., is going to get crushed, and that's why you're seeing this at the moment. Fundamentally, it shouldn't be because of inflation, but that doesn't matter. It's about crushing the price of the metals at the moment, and they're doing a damn good job of that. And for me, we're still not down at the lows yet of where this move is going to go. We're going to go through the 20.50 and also down to $20, and if not, if it doesn't hold at 20, we go down to 19, which I never thought we'd see again after the March 2020 $13, and then the rally up to nearly $30. But it is what it is, and that's because of the dollar. If this goes to 120, which is the all-time high, then that certainly will be the case, and then there'll be an explosion in the silver price when the dollar actually eventually makes its way back down, and the reality kicks in that it's not worth the paper it's actually printed on. But until that happens, then we go lower across the board in all metals. And finally, in the crude oil, you can see this bouncing, coming back in this current wave to 89%, and now we're wanting to retrace back to the 50 bar moving average, the 20 and the 5. Okay, that's it for this one. Let's see what happens during today. Like I say, there's not a lot of news for today. We've just got economic forecasts for the EU. Well, dire is the word for that. And Empire Manufacturing Index, that's actually just spotted that. That's marked down significantly, isn't it, from the previous. So they're expecting some bad news then. And 3:15, we've got the monetary policy statement from Bailey. Okay, that's it. As ever, thanks for watching. See you in the next one.